Don't forget to subscribe to the Social Gup and hit that bell icon for latest videos and updates.
A single tweet can now wipe billions off market valuations in minutes. Global markets just experienced their biggest shock since 1997, with Hong Kong's Hang Seng plummeting 13% in a single day. And it all started with a tweet about tariffs.
That's absolutely staggering when you think about it. We're talking about Trump threatening a 50% additional tariff that could push the total to 104% on Chinese imports.
Let me break this down because the numbers are mind-blowing. There's the existing 20% from March, then that sweeping 34% Liberation Day tariff, and now potentially another 50%. The compounding effect here could reshape global trade as we know it.
You know what's fascinating about this? The immediate ripple effects across every major market.
Beyond Hong Kong's crash, we're seeing the FTSE 100 down 4%, and similar patterns across the S&P 500, German DAX, and Japanese Nikkei. Trump's giving China until Tuesday to withdraw their counter-tariff, but Beijing's response, calling this economic bullying and hegemonic behavior, suggests they're not backing down. And meanwhile, other countries are scrambling to adjust.
How are other nations responding to this pressure?
It's fascinating, actually. Netanyahu's promising to eliminate Israel's trade imbalance, Japan's sending negotiation teams, and the EU's offering this 0-for-0 tariff deal, while simultaneously preparing countermeasures. But here's what's really interesting. Trump's comment about the EU being formed to damage U.S. trade interests shows a fundamental misunderstanding of post-war economic history. When you're looking at a potential 104% tariff on Chinese goods, that cost has to go somewhere. American retailers, manufacturers, and consumers are going to feel this. And what's particularly concerning is how this could affect inflation, which is already a sensitive issue. A single tweet can now wipe billions off market valuations in minutes. Companies that spent decades building global supply networks are suddenly having to reevaluate everything. The last time we saw this level of trade hostility was in the 1930s, but our economies are so much more interconnected now. What's particularly fascinating is how this might affect future trade agreements. Countries might start building in more safeguards, more escape clauses, more protective measures.
So what's your take on where this all leads?
Well, even if countries start negotiating these tariffs down, the trust that's been broken isn't easily repaired. We're potentially witnessing a historic shift in how global trade works. The post-World War II international economic order was built on certain assumptions about free trade and multilateral cooperation. The real question isn't just about these specific tariffs. It's about whether we're entering a new era of protectionism that could fundamentally reshape global commerce.